Hi, I'm Paul Bosley and I'm the owner of Business Finance Depot. And I'd like to welcome you to our series, Financing for Your Business Success. We've developed a series that show you how to prepare for underwriting and all the different types of loans and leases that are available to you to finance your business. We hope you enjoy the series. In this segment, we talk about how to prepare for an SBA loan. The SBA loan stands for the Small Business Administration. The Small Business Administration is part of the federal government, and it backs a high percentage of the loan, usually ranging from about 50 up to 90% of the loan. The reason that most lenders do SBA loans, especially for new business owners, is because it reduces the risk. Because Uncle Sam stands behind the loan. So in the worst case scenario, if the loan goes into default, the bank or the SBA lender is backed up by Uncle Sam, and they'll reimburse the company that did the loan anywhere from 50 to 90% of the loan. So that's the reason that SBA loans exist. They're the most common ways of financing a new business. So how do you prepare for an SBA loan? The first thing you're going to need is a source and use of funds. How much money do you need, and what do you need it for? So there's a form that we offer you that helps break it down into the different things you're going to need. Franchise fees, equipment, working capital, usually build out, money that you pay the landlord. They fall into those categories. The second thing you need is you're going to need your personal credit, which we talked about in an earlier segment. They're going to pull your credit, and they're going to see how your personal credit is, because all they have to go on when they're evaluating a new business application is how well you pay your own personal bills. The third thing they're going to need is a personal financial statement. A personal financial statement is just a form that you first list all your assets. For most people, that's your car, the money you have in your bank, the money you have in your retirement account, and the money that you have invested in your home, what your value of your home is worth. And then usually people have somewhere around 50 grand of stuff laying around their house, whether it's furniture, clothes, appliances, things like that. So you total up your assets. And then you total up how much money do you owe. How much money do you owe on your mortgage? How much money do you owe on your cars? How much money do you owe on credit cards? You total up your liabilities. And the difference between your total assets and your total liabilities is your net worth. And that's what the bank's looking at, or the lender's looking at, that's evaluating your application. What's your net worth? They get copies next of your personal tax returns. They either ask you to send them directly to the lender, or you sign a form and they get them from the IRS. First, they want to see if you filed your taxes. And then the second thing they want to see is if the income that you earn is what you reported on your application. And then the final thing is a business plan. And this is where I do my SCORE commercial. I've been a counselor for SCORE for almost a decade. SCORE.org is supported by the SBA. It's part of the federal government. And the website has got everything you could possibly need for a business plan. It's got a business plan template. It's free. It's your taxpayer money at work. It's got financial projection forms, which you can use. They're free. You can download them. You can watch videos about how to write a business plan. But the point is the main parts of a business plan, once you have the templates, is who are you? Who's the partners? What's your bio? Why are you going to be successful? What did you do to invest in yourself so that you're going to be somebody that's a successful business person? What kind of credentials do you have? What kind of certifications do you have? What's your degree in? What's your experience in your business? The second thing that's important is that you figure out what makes you unique. You can't be everything to everybody, otherwise you're nothing to no one. So the idea is what makes you better, what makes you unique, what product or service are you going to offer that's going to solve a problem that's going to make your business successful. And then you have to study your competition. There's a section in there for competition. You look at your competition. If there's no competition, maybe a light bulb ought to be going off because there's no market. So you look at your competition and you figure out what they're doing and how you can complement them or what you can do to make it slightly different. Those are all part of your business plan along with your financial projections. And once you do all that, you submit it, and you're going to have a lot of attention to detail for an SBA loan because it takes time. They can take anywhere from 1 to 3 months. and you're going to have to make sure that you have enough time to wait for that process to go through. So this way you have attention to detail and you have the time. But again, the SBA loans are by far the most common ways of financing a new business. If you need any more information, please visit us online at www.businessfinancedepot.com or email me at paul@businessfinancedepot.com. Thank you for listening.